Complete Guide to Stated Income Personal Loans. If you are currently unemployed, were recently laid off, or work for yourself, your personal loan options may be limited. Most loans require proof of income, which there's no way for you to verify. Some of the best bad credit loans, such as stated income personal loans, can be acquired without income verification. What is a stated income loan? A stated income loan is a personal loan for self-employed borrowers. Who can benefit from stated income personal loans? Stated income personal loans are particularly beneficial for a variety of individuals with non-traditional income streams. This includes freelancers with fluctuating monthly income, business owners with significant write-offs, real estate investors with depreciation impacting their AGI, anyone with tax return anomalies that don't reflect their true earning potential. Stated income personal loans versus traditional loans. Stated income loans can be great for those who don't have the right verification to apply for a traditional loan. For instance, if you're self-employed, you won't have to pay for the W-2s or pay stubs or prove your income. Plus, a small business may take deductions on their tax returns, which can reduce their taxable income drastically. As a result, they're no longer eligible for bigger loans. When a traditional lender finds your debt-to-income (DTI) ratio and credit score unagreeable, they'll disqualify you for the loan, even if you're actually able to afford it. With a stated income loan, you can prove your income with a few bank statements. Other differences between stated income loans and traditional mortgages include accessibility. Due to the high risk of fraud, stated income loans aren't commonly available. Interest rates. Stated income loans are non-QM, which is why they have higher interest for the lender. Down payment. Thanks to their high-risk nature, a lender may ask you to put down a bigger down payment. Why get stated income personal loans? As a self-employed borrower, you may be looking for loans without proof of income. Stated income loans allow you to prove your income in non-traditional ways. Benefits of stated income personal loans. Easy to qualify. Stated income loans typically require less paperwork than traditional loans. This can be great for self-employed individuals, freelancers, or those with unconventional income sources who find it challenging to provide documentation like tax returns or W-2 forms. Faster approval process. With fewer documents to verify, the approval process for these loans can be quicker. Less emphasis on credit scores. Some stated income loans may emphasize credit scores or past credit issues less. Instead, they focus on the borrower's ability to repay based on their stated income. Risks of stated income personal loans. Higher interest rates. Due to the high-risk nature of stated income loans, lenders demand higher interest rates to reduce the risk on their end. Higher risk of fraud. Because these loans rely on stated income without thorough verification, there's a higher risk of fraud or misrepresentation. We highly recommend hiring a financial advisor to guide you through the process. Lower loan limits. With higher loan limits, borrowers have the opportunity to misstate their income even more drastically to improve their chances of approval. Eligibility criteria for stated income personal loans. The qualification requirements will depend on what type of stated income program you apply for. An alt-doc loan allows borrowers to use non-traditional forms of income verification, including bank statements, profit and loss statements, business financials, or invoices. Bank statement loans allow borrowers to verify their income through recent bank statements alone. You'll need to provide at least 3 to 6 months of bank statements. If you're self-employed, you must prove you've been in business for at least 2 years. Application process for stated income personal loans. Gather required information. Even though these loans require less documentation, you'll need to have some basic information ready. That includes personal information, ID, contact information, etc., employment details and history, alternative income verification, bank statements, tax documents, etc., financial information, details about your debts, assets, and other financial obligations. Apply for the stated income loan. You can typically apply for stated income personal loans directly from the lender's website. Read the loan terms. Once you've received the loan terms, it's crucial to read the fine print to avoid getting scammed. Wait for approval. Luckily, you don't have to wait too long to get approved. Most get approved within a day or two. Sign the loan agreement. Once you've carefully read all terms and conditions, it's time to sign the agreement. Receive the funds. Finally, you'll receive the funds as a lump sum or via line of credit. Improving your chances of qualifying for a stated income loan. Prove income stability, non-traditionally. Any home loan will require you to prove income stability, even if you have seasonal income. You need to show that you have enough income or assets to cover monthly loan payments. You must also provide details about your employment or business. If you're self-employed, describe your industry and work type. 2. Review your debt-to-income ratio. Your DTI ratio measures what portion of your income goes to paying off current debt. Monitor your credit score. Your credit score is a key factor for lenders. It indicates how well you manage debt. A high score suggests that you can afford to pay back debts, while a low score implies a history of missed or late repayments. A better credit score will typically lead to more favorable loan terms, such as lower interest rates. Lenders may also examine your credit history, including your payment history, total debts, and number of credit accounts. However, most stated income loans don't put too much emphasis on credit scores. Managing and repaying stated income personal loans. Once you've acquired and used up your stated income funding, it's time to start planning how to repay it. Here are some tips that may help you in the long run. Create a budget. Your loan payments should be a part of your monthly budget. This helps ensure you have enough funds set aside for repayments. Set up automatic payments. Setting up automatic payments ensures that, in case of extra expenses, nothing is taken away from your loan payments. Fulfilling loan payments on time every month will also improve your credit score. Consider extra payments. If you have extra funds, it's wise to make additional payments to reduce the principal balance. Before you do so, read the loan terms to learn about any prepayment penalties. Hire a professional. We can't stress enough the importance of hiring a financial advisor to guide you through a risky stated income loan.